Hello traders. The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting the video. The content is produced for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any investable instrument discussed. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. For people who saw the video I posted yesterday, I'm not going to waste your time. This is not really for you. This is an excerpt from the video about Exxon. If you didn't see the video, the long 41-minute video from yesterday, you really need to watch it. It covers a complex relationship between energy, metals, and a dollar, and Exxon was an example in that longer video that's going to tell you what I think is going to happen in the days and weeks ahead. But I wanted to go a little deeper about Exxon. Exxon is the largest energy company on earth. What's I guess unique about it in a sense, and seeing these in the other videos, I explained how oil had been falling since 2008, but we see on this chart Exxon peaked at 2014. Well, why is that? Because Exxon is what's known as an integrated company. They not only dig for oil, explore. They're not only in oil exploration, but they have refinery activities as well. Refineries or oil refining is how we get plastic and gasoline and other types of fuel, jet fuel, different types of fuel. So Exxon they process the oil. They don't just extract it. So while as oil declined since 2008, Exxon was able to benefit from the decline by processing the oil into other things that they could raise the price on. Okay, so while they was losing money in one corner of the company, they were making money in another section of the company. Now that only lasts for so long, and that's why Exxon peaked in 2014. What I have here is a candlestick chart. This is a yearly chart. Every candlestick here represents a year. Now this is not going to be a long video. I just want to make sure people understand what's going on with the largest oil company. But like I said, each of these candlesticks represents 1 year. And everyone by now knows that I am a proponent of Elliott Wave Theory. There are lots of videos around that you can look that up. I will get around to breaking it down, but it's just it's for purposes of me demonstrating what's going on with the price. You can see it here. I'm teaching you a lot of principles as we go, but if you want to really understand Elliott Wave Theory, it's really not that deep. It's 5 waves up, five waves up, three waves down. Okay, and so in the coming weeks I will be getting more into it, but just with that concept in mind, I wanted to show you why I think Exxon has completed a 5-wave pattern up. Okay, I'm calling this 1 all the way here. 1, 2, 3, 4, 5. The rule in Elliott Wave is that wave 4 can't drop below the peak of wave 1, and that didn't happen here. So the wave started before. This chart goes back to like 84. I would really need more data to see where wave 1 really began. but we don't. I don't have enough data in this feed because all my charts are free. And what I'm using right here in front of you is freestockcharts.com. Okay, so this is 1, 2. So basically, I have my moving averages set. Every time you see the price drop below this yellow, that's a, I guess you could say, an even number. So all the odd numbers go up and the even numbers go down. So that would be 1, 2, 3, 4, 5. Now, what happens after a 5 wave count is a pretty severe retrace. And it's kind of, it's not cookie cutter on how deep that could be. It could be 50%, it could be 80%, 90%, 95%. It could, so we kind of have to follow it as we go. And let's see. We want to show you something on another chart. So we got the 1, 2, 3, 4, 5. And for you volume watchers, we see as the price was going higher, the volume in the market was abandoning Exxon. I believe this happened. This happened starting in 2008. This is when oil prices dropped. I think Exxon, rightfully so in my opinion, got treated like any other oil company. When oil was going down globally, the price of oil, everyone abandoned Exxon. But again, because not everyone abandoned oil companies. And I think Exxon got caught up in that. But like I said, Exxon being an integrated oil company, they were able to still make profit off of selling gasoline, and that story was strong enough to make people, at least, although a diminishing number of people, it was a declining number of people. It was enough to make them continue to buy it. Let's see. Let's see. Same chart, just different information here. Let's see what I wanted to show you. I'll show it over here. Also, we have what's called a reverse head and shoulder. I'm sorry, not a reverse, a head and shoulders pattern. See this line going across right here? This green candlestick on the way up did not exceed the peak of this red candlestick in what I would call here the top of wave 3. So this price action above the broken line, that would be the head. And this would be the left shoulder. This would be the right shoulder. That's called a head and shoulder pattern. That's not a good thing. That's a reversal sign. So I just wanted to point that out too. So just keep your eyes on, let's see, I'm going to show you. This is that left shoulder. Eyes on the upper left. You see the high is 96.12 in the information box there. Over here on the right shoulder, the high is 95.55, so it didn't happen. And on this chart, we're looking at a monthly. It's a pretty big candlestick drop there for Exxon. And on this chart, again, we got the volume decline, and this is my stochastic showing the same thing. Let's see. Do I have anything else? I don't think so. I think that's all I wanted to bring your attention to. This was important enough to do a separate video because, like I said in the beginning, Exxon is the largest energy company in the world. And if Exxon starts to dive, we're looking at a drop from here down to like 40, mid 40s, early 40s. So this is just a picture. Let me get this other chart. Okay. So we're looking at mid 40s. This is not exact, but mid 40s, low 40s, 40, 42. So we'll kind of see how this goes. And if it crosses that point, we're looking at $26 level. Now the high was 104. Now, if it dropped down to say the $20 level, that would be 80%. And so what, $26 would be about 75% roughly. Just using fuzzy math here. That would be about on order for like that 78% retrace. Let's see. Let me do this over right here. Kind of show you having an anomaly going on with this chart right here. Well, I was trying not to take that off because it won't let me go down enough. You see the 78% line, or see, yeah, it won't let me go. Maybe if I let me throw these things away. We don't need the volume and MACD anymore. Okay. So they have 50% on here, but 50% is not actually a Fibonacci number, a value, or a, let me say, the golden ratio. It's not an increment of the golden mean or golden ratio. It's on there. It's on these Fibonacci extension tools because prices seem to fall, especially like a wave 2. They seem to fall there a lot. This I can't do it. It won't let me make room. Won't make room for me to go there. Crap. I'm not a fan of this tool here. Let me try something. Now you see why I use more than one. Oh, this is the picture. Guess I'm done with that too. Let me go to the actual factual. Let's see. Okay, let's see. Let me put this 78% on here. I'm just showing worst case scenario. Oh, I don't have it. You can edit these values. That's why I like this particular. It's 78 point something. I don't remember exactly what it is, what the fraction is, but we can go fuzzy on it. Because again, with these Fibonacci extensions, it's not exact. It's not magical. It's going to put you right on the number. You still have to use other oscillators, trend lines, watch for candlestick formations. You still have to confirm these directional changes on the bottom by using multiple oscillators and strategies. Okay. So that would put us around the $27 area if it was to fall all the way down. In this, let me see. Yeah. All right. The next Fibonacci level, below where we are, the next Fibonacci extension would be around $43 for Exxon. If it fell beyond the $43, we would look at the 78%, 28. Now, like I said, you don't just jump on that number because it's a line on this extension tool. You're looking to see a bottom, a base form, and you'll see a trend line violation. You'll see some of these various oscillators like the MACD and the stochastics that we talk about that I like to use. You'll see crossovers there. But I'm just saying, I believe Exxon is going to fall, continue to fall. And once we get to 43, we'll see where we are. And then we'll look for 27, and if we go through there, it's not good. We could end up around, in the single digit numbers. Exxon is big enough of a company to cause a ripple, a global ripple, when it falls. Let me put this on a 1 day and show you when we had that big decline in the market, when everyone thought this was, well, I still think this is the big one, okay? But people are now saying, oh, we've recovered and the bull run is back on. I don't believe that. The point this daggone chart is acting up. I'm trying to zoom in. That's what I'm trying to do. Yeah, just try to show you that. Again, when the largest energy company on earth declines, there's a lot of money in this one stock. The Dow and the S&P 500 is going to respond in a very negative way as something as large as Exxon takes a decline. And I'm very surprised that we didn't hear more in the news pointing out the decline in Exxon as a force that was likely the biggest culprit for that decline. There are a lot of mutual funds and ETFs that have Exxon because it's considered safe because of its size and because of its presence around the world. So in the days and weeks ahead, keep your eye on Exxon, because I doubt that these markets can hold up if Exxon is continuing to decline. Well, that's all I have. I just wanted to run that by you. Like the video, comment, subscribe, hit that alert button.